Good morning, traders. Todd here with the Trading Authority. Just wanted to walk through a setup right now that's occurring in the Japanese yen. Now, you'll note right here in the Japanese yen chart that I've got in E-signal that the market has already rallied into the short entry. Okay, this short entry occurred 9/13/07. Market then did pull back into our initial scalping contract target, which was the 114.61s. Okay, so right there's been about 80 to 90 pips with bid-ask spread built in profit. Now, as the market rallies back into this price point, I want to show you an aggressive short entry. Okay, we had beautiful symmetry, A, B, C, D. As the market is testing and rallying into this area, you'll see highs at 1588. So I want to walk through the progressions of entering the signal. Okay, and this is the execution platform right here, NinjaTrader. So as I go through this, you'll see that the market is currently trading at or even higher than the 115.50, which was the original short entry right here. Because it is trading through that, this is what I call an adverse excursion. So right now, in order to get short, it's a market order. The market's already moved through the 115.50. So right now, you're actually getting a better price on the fill. So let's go ahead and sell 2 contracts, quantity. At market is the order type in the U.S. yen. Do you want to place this order? Asking for confirmation. Check the sell market 2 contracts, and yes. Now I'm going to get confirmation saying order filled with an audible tone. Now after I've done that, I want to be sure to protect the position. So I want to now set my protective stop. The stop is going to be above the market, and you can see that the swing high right there at X is 1647. Look left, I have a little swing high right there at 1661. So I want to respect that 1661 and number round just above that and go 116.66 or 67. So remember, we were short 2 contracts. So I need to buy 2 contracts now. And over here in price, I'm going to highlight this and type in 16.67. And now this is a buy order. I'm currently short 2 contracts. I need to buy 2 to cover that position. Do you want to place the order? I want to buy stop placed on 2 contracts in the U.S. yen at 116.67. That's correct. Left click yes. Now, the market order got a short on the Japanese yen. The buy stop is protecting the market or protecting the position in case the market does rally. Now, let's go back into the chart here and do our analysis for the balance of the trade. You'll see here that this swing low comes in at around 1460s. That swing low comes in 1473. So from the current short entry, I'm going to place a limit order to buy 1 back, just the scalping contract, at 115.07. So I'm going to take this, delete it, make that 15, and then backspace there and make this 07, and I want to take my quantity down to 1 contract. Now this is going to be a limit order that's going to be resting below the market. So if the market sells off and comes back down here in the direction of our current short position, then the limit order will be resting right here to take profits on 1 contract. So I want to buy 1 of them there. Do you want to place the order? Buy 1 on a limit for profit at 115.68. Now you see the price changed. I don't want that. I want 15.07. Okay, so now let's go back in, buy 1 at 115.07, yes, confirm. And now let's go back here, we'll tighten up the chart. I'm going to copy and paste, and let's assume that that swing high is the highest high. I want to cover the balance down here just above the 112 area. So I'm going to set the other contract, the other 1 lot, at 112.07. So I'm going to place that limit order. So we're short 2, a buy stop placed on 2, and now I've got 1 contract as the scalper, and now 1 contract as the trader for the extended target. And those are both buy on the limit. Now let's look at this right here so you can see the working orders. Right here, we sold at market a 2 lot. Right there's the original short entry. Then we covered immediately. We have buy stops in here on the 2 lot at 116.67. That's the protection. And then right here, We said buy 1 at 115.07 for profit target on the scalper, buy 1 at 112.07 for profit target on the trader, and now on the short entry right here, 2 contracts, position size, 1 scalper, 1 trader. That position's bracketed prior to the Fed. Now, if we were to consider a stop and reverse, we could see significant directional movement. So what I'll do is I'll come over here into eSignal. I'm going to grab the Fib Extension, and I want to do an inverted Fib Extension. I want to take the lows at A up to the highs at X, and I'm going to pull it back down. Now, the thought process here is what's going to happen if we get a significant rally in the Japanese yen based on the Fed news today? Then we expect a move to 117.50's minimum, which is the inverted 127 extension. And then the butterfly completion pattern would be out here at around the 1618. So if I wanted to use an SAR or a stop and reverse strategy up here, then I would come up, I would take the buy stop right here, and instead of buying 2, which would cover the 2 contracts that I'm currently short, I would actually buy 3 or 4. If I buy 3, then I'm going to be long 1 contract. If I buy 4, then I would get stopped out of my 2 for a loss and be long 2 contracts. And then we'd look for a significant extension on that market. So let's go ahead and add 2 more. I want to place a buy stop on 2 additional contracts at the same price, 116.67. And again, this is telling me that if the market goes to 16.67, then not only will I get stopped out for a loss, but also I'll be stopped into 2 additionals, which will put me net long 2 contracts. So there's my protective stop on 2, and there's my buy order to get long on 2. Now, because we expect volatile movement, we want to also place a limit order up here for a profit target. And we'll see if they allow us to do it because we're not net long yet. So if I get long at 116.67, then we're expecting to move to 17.47, the 127. So I want to go ahead and place a limit order. I'm going to pull it down to a 1 lot. And now we want that to be at 117.44. And that will be a profit target on the long entry at 116.77 if the market goes higher. Do you want to place this order? Sell 1, yes. And now you see it's working. So there's the buy limit. There's the sell limit, which is taking profit. And then here's the buy stop for the stop and reverse on the Japanese yen. So basically, it's bracketed. If the yen US dollar cross responds with a bear reaction and goes down to 115.07, then a limit order for a profit target right here will be hit, and then I'll come back in and change stops. The stops will trail behind the market. If the market instead rallies off of the FOMC news or any news that we have today, then the position will be stopped out right here and stopped into a long position with the first target right here at the 127 extension. And that would be an SAR right here. So current position, again, a very aggressive short entry. This position right here has already paid about 80 pips on the scalper. I just used this rally back into this point of interest to show you A, stops, B, limit orders for profit, C, an adverse excursion entry, and then finally D, if the stop gets hit, then we want to consider the SAR right here at 116.67, targeting contract number 1 at 17.47 for about 80 pips of profit, and then see if we get a drive into 1880s for the extended target. So that's the SAR on the Japanese yen prior to the FOMC meeting on Tuesday.